Let's speak now to markets analyst Timothy Pope, live in Shanghai for us. Hi there, Tim. So travel spending saw a 47.3% year-on-year growth, surpassing 2019 levels. How significant is this for China's economy, which of course is facing deflation and weak consumer demand?
Well, Paul, I mean, obviously, the data that we've got today for the Spring Festival and Lunar New Year is significant. It's famously one of the biggest human migrations and a time when families travel together. We saw China's Ministry of Culture and Tourism publish those numbers on Monday, saying that domestic trips were up more than 34% compared to last year, and tourism spending, as you just said, up more than 47%. And it is crucial that both of those metrics also rose when compared to 2019, because it is, of course, that all-important growth compared to the pre-pandemic era. Reuters and Goldman Sachs have both done a bit of a breakdown of those numbers too. Reuters calculates that the average spend per trip was actually down about 9.5%, and that also tallies with data that was released by Customs at China's holiday hotspot, the island province of Hainan, where Chinese people can shop duty-free. Foot traffic there was absolutely through the roof compared with last year. Huge growth, up 90%. But the average daily spend per person was down 26%. So that is perhaps an indication that consumers are doing a bit of belt tightening. But the numbers, we cannot deny the numbers are still very strong.
And how does this bode for the year ahead? Are we going to see a rebound of consumption?
That really is still yet to be seen. Sentiment is still pretty much up in the air. When we're looking at the Chinese stock markets as an indication of sentiment, we're certainly seeing that investors came back from the Spring Festival holiday with some optimism. And whether that bodes well for the consumer front, we're just going to have to wait and see. But we saw the Shanghai Composite Index up about 1.5% today. The investors have had about a 10-day break to chill after what was a pretty turbulent end to the Year of the Rabbit. And we've also seen the Shenzhen Component Index rising today, and the Chinex, where we see a lot of the small cap tech and biomedical stocks up as well. And a lot of the optimism that we saw on the markets today did come from tourism and entertainment-related stocks. But consumers are certainly going to be watching, particularly the housing sector. That has been an area where Chinese consumers have really looked to get a sense of how the economy is faring. It's been in a little bit of a trouble spot over the last year or so, and people are going to be looking for the next data points to come out.
OK. Timothy Pope in Shanghai, thank you very much.